What's up everyone, it's Moneyvest. So in this video we are going to be talking about our degen list. So this is going to be so-called a moonshot list with a very, very asymmetric profile for risk reward. Again, I want to put a huge risk disclaimer. I'm going to bring it on again. So make sure that you understand that this is just a list of highly leveraged and highly volatile and highly risky ETFs that are available in the market. So again, these are all instruments that have been created because there's a demand for it, obviously because there's a lot of shares being traded, millions of shares being traded every single day. But how you use them really, really matters. Okay, so we don't want to take on too much risk. Okay, so every person watching this video, if you're watching this video, you need to do a proper due diligence, a proper risk analysis, and an understanding of how it fits in your own portfolio, right? If it even fits. If it doesn't fit, that's totally fine. There's a lot of stocks out there. There's a lot of safe, stable, underlying companies out there, high quality businesses out there that you can choose to invest in. But this is simply a tradable degen list. I'm even laughing kind of bringing out the name here because this is again very, very high risk, right? So if you look at the spectrum of all the ideas that we share, most of them fall in the conservative, sort of realistic and safe side. This is again going a little bit outside the box and sharing a list of 20 names that are of course going to be quite risky. So again, make sure that you understand that this is going to be very volatile. And if it doesn't fit your profile, skip past this video. You don't need to watch this. You don't need to trade this. Again, we've got our whole shopping list on our platform. So again, you can go over to our Moneyvest website. Shopping list right here. This is a list of stocks I've already shared. High quality names, very profitable businesses, great cash flows, great balance sheets, great long-term projections. Again, all with the buy targets already available. So this is simply for trading purposes. And I already have traded, for example, GGLL, right? So we made a nice $700-800 profit. I'm building a position in SOXL. As you can see, it's also part of the list. So again, simply taking on simple trades, swing trades, and short-term trades and ideas for us. So we're not betting the house on this, right? We're not taking on too much leverage on this. It's just part of the entire portfolio where I can allocate a little bit into these ideas, and they have that asymmetric opportunity because the underlying stocks are incredibly strong. So I'm going to go over the leverage aspect and of course the underlying stocks as well that they're tracking. All of them are very high quality, by the way. So that is already covered. Okay, so let's talk about it. There's 20 ideas in this degen list. These are some of the buy targets, like buy, heavy buy. This is exactly corresponding to the support levels and the buy targets that you have for the underlying stocks, right? So if you go over to the shopping list, and if you take a look at something like Google, like buy 320, and again, if you come over to the chart itself, Google 320 is going to be sitting right about there. Then if you correspond that to GGLL, for example, that's going to be sitting right about here, $85, $87, right? That's going to be the first one. That's exactly what I have here. $87 is the like buy. So it's corresponding to the underlying stock, its support level, and the like buy that I have for that stock. So again, it's giving us a little bit of that pump on the exposure. Again, I want to be very clear, this is risky, this is volatile, so make sure that you do your own due diligence on how you want to play this. How we play this is going to be different for everybody, but here's the list. So Google here, GGLL, 87 and 70, like buy, heavy buy. And one more thing I want to mention is that you might feel like these are very, very far away targets, but they move faster than the underlying stock. So again, I want to have to keep that in mind as well. That underlying stock, if it goes down 20%, since the leverage aspect of this is 2 times, it's going to go down 40%. So these stocks or these ETFs can actually get down to these levels much faster, okay? So just because we think that right now GGLL is trading at 114, oh, $87 is way, way, way far away. I mean, it's going to have to drop like 23, 24%. Again, it's a leveraged ETF. It's not a regular stock. So Google just needs to drop 10%, and GGLL is going to be down 23, right? So it's going to snap, it's going to be down to those buy targets. So don't think of these numbers as like too far away. Understand that they are leveraged and they can drop much faster than the underlying stock itself. So the first one is GGLL 8770, and again, the 2x is the leverage portion. Underlying stock is tracking is Google. Then you've got Microsoft, MSFU 2117, again 2 times leveraged. Underlying stock is going to be Microsoft. I've also got Palantir in there. Again, Palantir is a high quality name. The reason why it's in yellow and everything that you see in yellow is a little bit like, okay, I mean, it's a good ETF to trade, but it's also going to be a lot more volatile. The green ones are something that I'm a little bit more like higher conviction for me. So green ones are higher conviction, yellow ones are also high conviction, but the pricing and the volatility and the risk profile is greater than the green ones, right? So Google, Microsoft, obviously a lot more stable valuation, Meta more stable valuation compared to Microsoft, to Palantir and Tesla, of course. Tesla's trading at an insane valuation, so is Palantir. So they can be a lot more volatile compared to the other ones I have. And of course, we got Meta in there. Underlying stock is Meta. METU is the ETF 17 and 10. We got TSL, of course, 6 and 4. That's Tesla. AMZU, that's 25 and $20. I've only tried to keep the ETFs that are very liquid, right? That have millions of shares being traded. I mean, you might look at SoFi, SOFA. It's not part of the list, right? Because the volume is not there. 50 to 70,000 shares traded. So I want to exclude for the ones that don't have a lot of volume, right? Because we don't want to get stuck in a trade. We don't want to have to deal with a lot of bigger spreads. We want something that's highly liquid, that's being traded, that has a lot of eyes and ears, focused on it, that has a lot of tradable activity. So AMZU, then of course we got NVDL and AMDL. So those are both NVIDIA and Advanced Micro Devices. Again, 2 of the main chip stocks. SOXL is a position that I am building. Again, I'm planning to buy more. $72 is going to be light buy. $40 is a heavy buy. And for me, as I've already mentioned, it's a 3 times leverage. It's even more risky than all the other ones I'm mentioning. And for this one, again, I'm mentally prepared. If it actually drops further, I would be ready to cost average and of course buy more. And right now it's down 2.6% free market, trading down to 128. This is going to be that support level, so $70 down to $40. And as I've said before in the Discord many times, I'm mentally prepared to see SOXL trade down to $30-40. I know it's crazy, but it's not really, okay? Because these can be down anywhere from 80 to 90% and not blink, right? That's the crazy part about these leveraged ETFs. They can actually drop 70-80%. I'm about to go over a few that are already down 80%, 90%. And believe it or not, it happens very quickly, right? So that's why we have to be very, very careful with risk analysis and risk management on these. TQQQ is the tech NASDAQ 100. This is also part of the list here. 3 times leverage. So I've included both the NASDAQ 100 and the S&P 500 in this list. So we got $57 and $45, so 3 times leverage. Then we got AVL. Again, we've got $38 and $28. That's Broadcom. So Broadcom, again, very liquid, very tradable ETF here. So AVL is going to be this one. And most of them are going to be from Drexon. Again, they're the biggest issuer of leveraged products. And this also has some decent volume. It's a little bit lower, but I wanted to include Broadcom here. Broadcom's also a very high quality name. You're looking at 300, 340, 380,000 shares traded daily. Then you've got RAM. RAM is going to be the DRAM leverage version 2 times. So again, $8 and $6 are going to be some of the buy targets there. We got Nebius, NBIL, and not NDIS, but NBIL, 13 and 7, again, 2 times leverage. You got CoreWeave, CRWG. Again, these are all yellow flagged because these are very volatile. These are extremely, extremely risky ETFs. And you've got Micron, Marvell, and SanDisk. And these are the ones that are actually down quite a bit. Believe it or not, they're already down over 70 to 80%. If you come over to Micron here, take a look at from its all-time highs. It was down over 67, almost 70%. Then come take a look at MVLL. That's your Marvell ETF. Again, very high volume, 3 to 4 million shares traded. Take a look from its all-time highs. It was at one point down over 80%, right? Still down quite a bit. It's still down 70%. And then you got SanDisk, SNXX. Again, lots of volume, over 123 million shares being traded. So yes, investors and traders are trading these every day. And it's down over 86% from its all-time highs. So again, huge risk warning. You definitely want to pay attention and read this full risk disclaimer before you trade these. They can wipe out accounts. They can put into margin calls. They can actually be very risky. So what am I doing? I'm trading these names with the amount of capital that I can afford to lose. So my SOXL position right now is $20,000. That's it. That's how much I've put into SOXL so far. I can afford to lose that. If I lose $20,000 tomorrow on SOXL because it's an asymmetric opportunity, I'm comfortable and I'm okay with that. It's not going to change my life. I traded GGLL with 25 shares. I bought at $90. What was that position size? $22.50, right? I ended up making over $800. So go trade 30%. That is what I'm talking about. These are not where you bet the house. These are asymmetric opportunities where you take advantage with a small amount of capital you can afford to lose. You understand these are volatile, these are risky, but the upside is huge. The upside is massive, right? Because for example, SanDisk, right? If it jumps 120, 130%, that's going to be SNXX gain if SanDisk just goes up by 20, 30%, right? SNDK, after this big drop that we've seen for SanDisk, if you see that jump over 35 to 36%, it's going to be a 70 to 90% gain for SNXX, right? That's the whole idea, is that you don't have to do a lot to gain a lot with these kinds of trades. UPRO, again, it's S&P 500, it's 3 times levered, 121 and $100. SPCH, I've included that, SpaceX as well, 5 and $3. Again, this is also very liquid. I was surprised to see how many traders are trading this thing. 63 million shares traded yesterday. On average, you got 24 million shares, and from its all-time highs, look at this, it's down 80%, right? SpaceX down 80%. SpaceX levered ETF down 80% because the underlying stock SpaceX is down 40 to 50%. And then finally, we got IRE, 5 and $3. It's also 2 times levered. It is also down quite a bit from its recent local high. $43 is down over 79 to 80%. There you go. A lot of these names, the reason I'm putting this list together is because they're already down 70 to 80%, right? Can they go down another 70 to 80%? Yes, absolutely. I'm going to put this on the list here. Can they go down another 70 to 80%? The answer is yes. Anything is possible. Just gonna put that over here, just as a big risk disclaimer that just because they're down doesn't mean they can't go down further. So trade accordingly, size your positions accordingly, manage your risk accordingly, put your stop losses in place so that you don't end up holding a bag on something that may not work. And the green ones that I mentioned are some of my higher conviction ones because the underlying stocks are incredibly strong. So I could see myself, again, trading those more than the ones in yellow, but the yellow ones are also quite interesting, especially memory stocks and chip stocks that are down 70 to 80% from their recent highs. So hope you all enjoyed this video. And again, this is the first time I'm putting together a degen list, so I'm really, really expecting some high caliber here of risk management from you guys. Because if you want more videos like these, if you want me to do more analysis and more ideal lists like this, I really want good risk management from all of you, okay? This is not, I'll never do this again if I ever come across a story where someone's holding a bag or someone did not have a stop loss in place and someone got themselves into a mess. I would never do these videos again. So if you want these ideas, I want proper risk management. Yes, we can have fun on the names and everything. It's a degen list, but we want proper risk management because it's real money on the line. So make sure that you're doing your due diligence on that. As always, happy investing. I'll see you all in the next video.